You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it is Interview Tuesday once again for Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network, reminding you wherever you're getting this content, not just the interviews, but everything we do throughout the week, usually a couple of shows hitting you a day here on the network. Keep rating and reviewing it wherever you find it on your platform of choice. We've seen just an explosion of new listeners over the course of this mad, insane past year. We want to keep that flow going, give these folks a lighthouse to turn to in these troubled waters. So keep rating and reviewing on your platform of choice. It really does help those new folks discover the content. Of course, keep those questions and comments coming too. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from on the old Options Insider Radio program. I'm pleased to say we are joined by two newcomers to the network, Mr. Mike Brodsky, the CEO, and Steve Sears, the president and COO over there at Options Solutions. Gentlemen, welcome to the Options Insider Radio program.
Thank you.
Well, let's kick it off. You're both newcomers. Steve, I've known you for a while. I'm surprised it's taken us this long to get you on the network, but nonetheless, we're making up for old wrongs now. So let's start there with all of our first timers. Why don't you give our audience a little bit of an overview of your background in the options and derivative space and how you found your way to Options Solutions. I guess, Steve, we'll start with you.
Thanks very much, Mark. It's great to be here with you today. I've long admired your show and appreciate the time. The road to Options Solutions has really occurred over the past 20 some odd years. When I was a young reporter at Dow Jones, I was asked to cover the options market by the senior editors. And I asked them, what are options? And they said, we don't know. We think it's important. Go find out. One thing led to another. I wound up pioneering coverage of the options markets for the Wall Street Journal, covered the major miscarriage of capitalism in the markets, otherwise known as the gentleman's agreement, where the exchanges basically decided against multiple listing options. Covered that led to huge changes in the industry. From there, I went to work at the Philadelphia Stock Exchange with Sandy Frusher as senior advisor to the chairman, helping to demutualize and restructure that exchange. Then I went to work with David Krell and Ivers Riley at the ISE, which, as you know, was the first all-electronic options exchange. That exchange went public on the New York Stock Exchange, the first securities exchange in America to do so. After about a year or so after the IPO, I returned to Dow Jones, started an options column for Barron's.com, the online component that we launched, and also for the magazine. And I had been doing that for a number of years. I had the opportunity to work with Bill Brodsky and Michael Brodsky, and I jumped at it. Bill, as everybody knows, he's an incredible executive. He's an incredible visionary for the industry, and I think we all had the same idea that now was this incredible time in this market, perhaps as profoundly significant as when the exchanges began to demutualize and go electronic. But now was such a time to bring options more directly and more simply and more impactfully to investors.
And Mike, same question for you. Obviously, your first time here on the network. Give our audience a quick overview of your background in the option space and how you found your way to becoming the CEO over there at Option Solutions.
Sure. So my background goes way back in options to high school, actually. I worked on the floor of the CBOE when I was in high school. Worked as a fill reporter, tracking the fills that were done by hand back in the early 80s. I worked as a board broker clerk and then went upstairs for a summer with a firm some people may remember, Goldberg Securities. Then went to college, went to law school and business school at Northwestern, practiced law for a little bit. And over the course of about 20 years, spent my time not in options, but as an investor and manager of technology companies. My focus over the past 15 years or so has been in publicly traded companies. I ran an investment vehicle with J.B. Pritzker and his family office, making investments in small public technology companies. I was on the board of a number of those companies and ran some of those companies. About a year and a half ago, when my dad retired from running the CBOE, as he was retiring, he came to Northern Trust, with whom he's had a long relationship, and said, "I've got a lot of stock, a lot of concentrated stock. I've always sold covered calls since the very, very early days owning stock. But I've got this stock now. I'd like somebody to sell calls on my concentrated positions in a serious, organized, and disciplined way. I'm busy. I don't have the time to do it. There's got to be somebody there at Northern Trust who could do that for me." And the options guy at Northern Trust said, "No, we don't have somebody, but that's a terrific idea. If you were to offer that sort of a service, we think there'd be a lot of interest, certainly at Northern and even more broadly." So about that time, I was thinking about what my next thing was. JB had just become governor, and my dad came to me and said, "Why don't we set up a company to do this?" We started on that, and then went from there to have Steve join us, and then build out a team focused on selling options on concentrated positions. And that's how we got to here today.
So you kind of touched on it there, Option Solutions. Let's dive into it a little bit. Obviously, it kind of had its birth, its genesis around the covered call selling, of course, around the concentrated positions you just referred to. Is that pretty much the gist of it? Is it people coming to you and you're creating bespoke one-off solutions for individual positions, or is it a fund? What are we talking about here, gentlemen?
Well, it's undeniably that people with large concentrated stock positions or big portfolios of equities are looking to optionalize the funds. And we help them with that. And sometimes we sell calls and sometimes we sell puts. but that's basically it. Each customer is different because each customer has a different investment objective. What we find many clients are interested in is increasing income and reducing risk. And you know as well as we do that one of the ways that you can do that is by selling a call on your equity. And I'm going to tell you, I think that's one of the classic strategies, but I also believe that it is one of the least appreciated. And when you do it in a systematic, disciplined way, interesting things can happen.
I like how you mentioned that systematic, disciplined way. Our audience likes to get into the weeds of this kind of stuff. They like to dissect it from all different ways. So let's talk about that systematic approach. Let's say I come to you, I have a concentrated position in everyone's favorite underlying X, Y, Z, and I want some income. Is there an approach you typically take? Is there, let's say you like a 5% out of the money call, you maybe at the money call type seller, or is it going to vary by the client? How do you tend to structure the covered call component of the portfolio?
You know, I think that's a great question. And the way we structure it is by doing the due diligence and having a meeting with the client. Each client's needs are different. Some people want to keep their equities. Other people are willing to sell their equities at different times. It's almost to truly sum it up, to tell you the truth in one quick sentence. But I can tell you this. As we always like to say that options give you options. You can take a look at the options montage. You could be 5%, 10%, 15%, or 20% out of the money. And you just have to dial in with what the client wants. The client drives the engagement, and we use a certain process to manage that engagement.
I think that's really the important point here, Mark, is that this is a custom solution. While we are systematic in terms of management of our clients' accounts, every client is unique, and we manage the positions according to their priorities, which may change over time. And we will pivot our management of those positions based upon their preferences from time to time.
Well, what we find, Mark, is that even though the covered call strategy amongst the options cognoscente has a reputation of just sort of being, a very basic approach, even to the most sophisticated investors, and almost by definition, you're sophisticated if you have a large concentrated position, there's an education process. And we find that once people understand how to prism their positions through the options market, it kind of changes the way that they think about their portfolios. So you can start out by using stock XYZ, as a covered call proxy, and you manage that program over time, and then invariably it will lead to other interests, because you can almost sort of see the light bulb go off in people's minds, and that's pretty cool.
Well, that is certainly a fascinating moment when people, like you said, the light bulb goes off and they start to realize what they can do. You mentioned you thought the time was now. This was the perfect moment to launch something like this. So how has the response been so far? What are you hearing from the clients? Are you starting to see that proverbial light bulb go off more and more?
Yeah, one amazing thing, I think the response has been very good. One of the most amazing things to me, Mark, is we've got some incredibly sophisticated, experienced investors, people who've managed companies, managed investments. They all know about options conceptually, but the reputation of options is different from this sort of experience we give them. That this is a de-risking and incremental income experience as opposed to what they believe options to be. And the amazing thing that happens with this is you have very, very smart people who, when you provide them with a relatively straightforward strategy, the light bulbs really do go on, and then they want more, and then they tell their friends. And that's I think the beauty of the opportunity here. It's easy to, as you know, to get into options and get complicated very quickly. We start out very simply, and a fair portion of our work is really that of education.
Well, let's touch on that education for a bit because it's kind of been a theme of ours on this network. In fact, we discovered this chasm of education in the advisor and asset manager space a long time ago. We've been running a show on our network. In fact, it just hit its 100th episode anniversary just last month. We call it the Advisor's Option, specifically aimed at this audience, the advisor and asset management audience, and trying to get them up to speed, if you will, in the world of options. Yet there still is an amazing gulf, an amazing chasm between what even, your first month clerk on the floor used to know versus what someone who otherwise in a very experienced, savvy financial professional knows when it comes to the world of options. You folks are diving into that market now. So I'm kind of curious from your perspective, why do you think that gulf, that chasm of education still exists? Your typical RIA, your typical fund manager out there really doesn't even know these relatively basic strategies like covered calls. Is it just the testing, the examination programs we have in place aren't really designed to educate about options? Is it fear? Is it something else? Why do you think we're still in this environment in 2021 where something like a covered call fund is still relatively novel?
Well, I think that the reason is that a friend who runs private wealth in one of the major banks told me that if you were to review all of the accounts that they had, you would find that the wealthier, more sophisticated clients tended to use some type of an options program, but that as you sort of went farther down in sort of the AUM, the assets under management screen, you would find that options didn't really exist. And the reason he thought that there was a disconnect was that it takes expertise and it takes time to manage an options position. An options position, even a covered call, is not something that could be set and forget. You don't buy the ETF and then let it marinate, in its own returns for a year. You have to watch it, even when it's out of the money, even if it expires within 1 to 3 months. And financial advisors, of course, aren't necessarily compensated on the success of a covered call program. What they're compensated on is assets under management, and that's the tension within that particular business. And I think that sort of misalignment is one reason why. And the other issue is, like, take a look at the Reddit phenomenon and GameStop. My own mother called me up and she said, "Stephen, what are you involved in? Are you doing this GameStop stuff?" And I said, "No, Mama, what we're doing is this, completely different." And so the options industry has always sort of suffered from a misunderstanding or a misperception. So when you take that, because it is more complicated than just buying stocks. So when you take that particular hurdle, plus the fact that you have to manage these things and kind of know what you're doing, and I think that puts the industry at a little bit of a disadvantage. And also at an opportunity for guys like us.
You're right. Options are certainly the go-to whipping boy for everything, even things like GameStop, where they're not necessarily to blame, even though maybe a little bit of a catalyst there along the way. Now, I mentioned, something like a covered call fund is still relatively novel. That said, there has been just a mass exodus of experienced options professionals from places like the trading floor over the past couple of decades. SIBO, other exchanges around the world have all migrated upstairs. Steve, you were a part of that process over there at ISC. So a lot of these guys have now taken the steps into the asset management realm. A lot of them have realized what you've come to the realization of as well, that covered calls, there's an opportunity there. So they've jumped in and launched all sorts of covered call funds. It seems like they are all the rage these days. So how do you plan to stand apart from some of your other competitors that are lurking out there, specifically when it comes to the covered call arena? Or do you think the pie is still so big, the blue ocean that's available to you is still so vast that there's room for everybody?
Well, I think that's a great question. I think that there's always a lot of room for different types of investors and practitioners. And we've always said in the options industry that we would grow the pie. I think, though, what you're sort of seeing now is people have left the floors and they have launched their own options funds, but everyone's doing it in a slightly different way. A lot of these firms are very systematic. They do the same thing again and again and again. I've seen and reviewed almost all of them, when I have my journalist hat on, and I would tell you that the way I think we're going to differentiate ourselves is by what Michael said. We're going to be extremely systematic, very bespoke. very high touch, and we're going to work with our investors to help them achieve their goals. And at the same time, we're going to educate them as to the power of a well-placed put and call. And I feel, fairly bullish on our prospects. The fact that people have come and left the floors and already started just means that the ground is fertile and plowed. There can be Pepsi and there can be Coke, Walmart and Target.
The power of a well-placed put and call. I like that. Well said. Well, gentlemen, that music means we're coming up against it. But before we go, we like to leave our audience with a hint of a tease. We like to leave them wanting more. Obviously, one of the larger trends we've seen in the world of options over the course of 2020 and has continued into 2021 is just the explosion of the retail side of the option space. I know you're focusing right now on the concentrated, sophisticated investor realm, but perhaps down the road might we also see an offering for something in the retail realm as well, gentlemen?
I mean, everything is possible in this market. Right now, we're very heavily focused on building the business out amongst the high net worth market segment, but we see many opportunities in this market.
And if our listeners are intrigued, they want to learn more, maybe they want to reach out to you about their own concentrated stock positions and what they should do, where should they go, gentlemen?
Optionsolutions.com. There's an inquiry form. They're welcome to look around the site, learn what they can. We've tried to make the site informational and educational along the lines of what we discussed earlier, Mark. And there's a form that one can complete and submit an inquiry, and we'll follow up.
And of course, our compliance people would kill us if we didn't say this is not a solicitation, but simply it's just information.
Just information. Just a couple of folks chatting here. There's nobody listening. Just us chatting here. Check it out for yourselves, listeners. Options Solutions, 2S's.com is the place to go. Some interesting case studies if you're on the fence. What can these covered call things do for you? Some interesting case studies there. And gentlemen, I appreciate you joining us today on our Options Insider radio program. We'll keep an eye on Option Solutions and see how your own solutions, how they all unfold in the marketplace in the coming months.
Great. Thanks so much. Great to be with you.
Nice to meet you, Mark. Thank you.
Thanks to everyone out there for joining us live and after the fact, sending in your questions, your comments, your insights. Remember, it's not just interviews here. It's a whole bunch more tomorrow. Education Wednesday. Got Options Bootcamp, Options Playbook Radio hitting you tomorrow. Thursday, of course, episode 2 of the bi-weekly extravaganza that is the Option Block, as well as This Week in Futures Options. Friday, volatility views, and all kicks off again on Monday, episode 1 of the Option Block and the Crypto Rundown, and all the way through to another Interview Tuesday, another episode of Options Insider Radio.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.